Welcome to the 2025 Economic Depression and Preparation Channel. I'm your host, Tony. Thank you for joining me on this weekday edition. Please be sure to subscribe and hit that like button. I appreciate your support, ladies and gentlemen, as we decipher the latest news on this economy that's happening right now. Now, as you know, we're going to be talking about the housing index and crisis as rents continue to rise across the cities in America. Mortgage rates continue to stay steady or stay high. That means that property taxes and homeowners insurance will be going up as well, and association dues will be going up as well in some communities. So NBC News had a poll about how hard it is to buy a home right now, a house right now, if you're even interested in that, if you're even renting. And also when we talk about Medicaid cuts, and possible Medicaid cuts could be on the chopping block with the new administration heading into summer. What does that mean for this economy? And also the U.S. economy is running on billionaires, pocket change. There was an article by a group, Jacobin.com, that was interesting, saying the top 10% of earners account for almost half of U.S. spending in the United States. And so wealth concentration, in other words, things that we've been talking about, the rich get richer, the poor get poorer, things like that. We're going to be talking about that. So that's briefly what we're going to be talking about today. Thank you for your support. Let's get right into it. How hard it is to buy a home right now. The NBC News Home Buyer Index measures the market. Home prices, interest rates, availability, and more factor into the NBC News data metric here that's updated monthly. So, traditionally, mortgage rates are above 7%. Now, we've seen in the late 80s, in the early 80s, mortgage rates were well above 12-15%, but interest rates were higher back then too, so it kind of balanced out. But home prices were cheaper back in the 70s, 80s, and 90s for the most part. But now mortgage rates are above 7%, as you can see, for the first time since 2002. And 3 out of 10 homes are sold above listing price. So everybody's taking advantage of this market here to either downsize if you're above retirement age, or you're trying to get a second property, a rental property, or some kind of timeshare. People are taking advantage of that while they can right now. But for those of us who are looking for a home, a house, a new starter home, those have increased in prices. The average starter home now is above $350K, $400K. In a lot of these locations, hot locations they call it. So the home buyer index, which NBC News developed with the guidance of a real estate industry analyst, gives a scale of 0 to 100. So a low index value of 10 suggests better purchasing conditions for a buyer. This is Chambers County, Texas, near Houston. Is one of 50 least difficult places to buy in the country. I'm guessing this is more rural Houston than compared to inside the loop or something like that. But in any event, they're saying that they have this index here and that they use. And so what do you think? Are you still interested in buying a home? Looking at the difficulty index here, it's at about 81.1%. So it's been on a steady rise here on a scale of 0 to 100. The easiest time was before 2014, where it was down between 20 and about 30% here, and now we've risen all the way up to 81.4% here, 84.1% here, as of November 2024. So let me know in the comments: are you considering buying a house or a rental property? Or are you considering renting in a cheaper city other than the big cities that that we're accustomed to being drawn to in America? So you can see the difficulty increases here in the darker green here on the East Coast, obviously New York City, Jersey, Maryland, DC, Virginia, Northern Virginia, down toward the Triangle, Research Triangle, Raleigh, Durham, Cary, all those areas, and then down in Florida, of course, along the coast, the Gold Coast, Miami, Palm Beach, stuff like that. And then, of course, the West Coast increases difficulty into Denver area, which has blossomed in the last 15 years. Of course, LA, San Diego Basin, San Francisco, Seattle Basin, of course, has been that. But in the middle of the country, you notice that big blank spot here. You can still find some deals out here in some of these rural areas in Kansas, Nebraska, the Quad Cities of Iowa. Maybe if you want to live out here, maybe if you lived in New Mexico or Wyoming or something like that, or maybe in the deep south, you can find some great deals here in southern Georgia here. It's possible, south of Savannah, maybe even into the areas into the central Arkansas, northern Louisiana. You still find some deals. Just have to deal with some things. So let me know what you think about that. Also, the Medicare. This is USAtoday.com had an article last month about Medicare covers kids, moms, and grandmoms. Now it could be on the chopping block, So people are concerned about that because, medical expenses, as you know, is a big part of life. Just maintenance medicines if you have diabetes or high blood sugar or high blood pressure, or maintenance medications have gone up in cost. If you can't get the generic version, or if you can't, your insurance doesn't cover certain things, it can cost, and so Medicare insures 1 in 5 Americans, and so the GOP budget, the Republican budget, could impact that coverage here, and so they're looking at cuts, and so hopefully they don't cut these entitlement programs like Medicaid, Medicare, Social Security, or any entitlement programs, food stamps, things like that, because a lot of Americans rely on that, and we rely on that to keep this economy going in a significant manner. So with the tax cuts, the budget passed, as you know, they've been budgeted through the House, and now it's going to the Senate here, the new Republican budget. It still remains unclear if and how Congress could curtail Medicare spending, but any cuts could impact large swaths of the American public here, as you know, because about 60% of American adults have either used Medicaid for health care coverage, or a known family member or a close friend has used the program, according to a recent survey conducted by the Kaiser Family Foundation. So you can see this is going to have a big impact. Nearly half of U.S. children are on Medicaid. So, all of this is going to have a big impact on our economy. Obviously people who live in rural areas are disproportionately rely on Medicaid. Increasingly people in the cities too that are, having to live in these high rises, these 55, senior living high rises, 60 and over only, or maybe, something like that, some other restrictions, they're relying on it too. And so everybody needs to get together and to consider action plans for medical bills that could be devastating for any family coming through in America right now. Now, the U.S. economy runs on, quote, billionaire pocket change. This is an article by Jacobin.com. Top 10% of U.S. earners in the United States account for almost half of the spending. Wealth concentration at the top. And this is one of the things that's going to be leading to this severe recession, because there's only so much money in the money supply, ladies and gentlemen, that we can print up and that we can use at any one again time. The American economy right now is $18 trillion, right? So we can print up more money, yes, but the value of the money goes down, the purchasing power goes down, and there's still a huge gap between the wealthy, rich, and the poor, the billionaires and the poor middle class of America. And that's always been the case. And yes, they have the arguments of saying that the super rich people create jobs, and I get that, the tax breaks, but what kind of jobs? Are these jobs that are going to be sustaining families of 2 and 3 and 4? Are these jobs that are just part-time, minimum wage jobs? $20 an hour used to be great money. Now it's not. It's just not cutting it. It's barely enough to make ends meet, in today's market. So they're not keeping up. So they're going to continue to expand and be in the bubble. The super rich people are going to be insulated because they're living off interest payments. They have interest payments and capital investments. All these big groups, as you know, BlackRock and Silverstone and all these groups, they own everything. So they're living off interest payments. And it's ironic because the U.S. economy can't afford their own debt interest payments, but the super rich people that have money all around the world is living off interest payments, and that's how they're able to continue to sustain stuff. Now, so the stock market isn't the real economy. This is according to this article, a fact that often lost on economic observers and politicians. So Wall Street isn't Main Street, as we know, and so once Main Street is crying out, Wall Street turns a deaf ear. But once the stock market crashes officially, I believe once it gets to 50K or higher, the Dow Jones is going to get above 50K, and then after that there's going to be a slight correction, a big correction of over 25%, and that's when people are going to start panicking. They're going to understand that, listen, we are in a recession, and we heading toward a depression if things don't change. And that's more than just pretending to cut spending. It's more to do with, like I said, creating jobs. You guys know, creating manufacturing, creating jobs, good paying jobs, manufacturing, bringing back a manufacturing base to actually take advantage of the creative skills of all Americans, and not just the top 10%, top 5%, 2% cream of the cream that they've been considering. And so, ladies and gentlemen, continue to prepare, continue to be abreast, but don't let the news consume you. Don't let all the negative news consume you. I'm still positive outlook on this economy, because I believe that all American people have skills, talents, and things that we have yet to untap into. We just have to focus more and don't get distracted by all of the negativity in the news and the press. Thank you for listening. God bless, and be sure to subscribe. I'll see you in the next episode. Thank you. Bye-bye.